So as you guys will have guessed by the chairs, another panel discussion is back. Now, as Ziv was mentioning, tokenization of assets really is a booming industry, and the potential is really vast as well. We can move from tokenization of real estate all the way through to different commodities. But we're going to jump in now and take a look at tokenization and really unlocking the true potential. So we're going to do a round of applause for all of our speakers now. If we start the clapping now, it gives them some time to get on stage. So we have Mohsin Masud from AKRU, who will be moderating the conversation. Welcome, great to have you back. If you want to take a seat just at the end, there's microphones on the seat as well. And we have Daniel Coheur. We also have Dave Hendricks. We'll keep the clapping. Well done, guys. Welcome to the stage. Elena Obukhova, Sandeep, Kaur, and Tommy Rostami.
Well, good afternoon once again. We're still missing, oh no, wait, we got, Tommy's here. Tommy's a really happy man from what I hear today, but I'm gonna let everyone start off with introductions. I'm not gonna be pushing a lot about AKRU. You guys heard all about AKRU before this, so we'll start with, to my left, with Daniel. You wanna tell a little bit about yourself, what you guys do, and we can run from there.
Yeah, sure. So I'm Daniel Kaur. I'm one of the co-founder of Tokeny. So Tokeny is a company headquartered in Luxembourg, but we serve customers globally. We have a compliance framework that is open source that enables to create digital security in a compliant way on public blockchain. It's a mix of security token, the RC3643, for which we have received recognition from the Ethereum community, and an identity solution called on-chain ID that enables that compliance framework. So we have today more than 100 tokens that we have created for about 28 billion of value, and we are backed by Euronext and Apex.
Dave.
Yeah, hi everyone. My name's Dave Hendricks. I'm the CEO and co-founder of Vertalo. We're a digital transfer agent. We got our start in 2017 when we had the crazy idea not to do an ICO and instead decided to do a security token offering. We launched that in March of 2018. It was a stupendous failure from the fundraising perspective, but it was very, very helpful for us to figure out where the holes in the market were. And so 4 years ago this month, we pivoted to become a digital transfer agent. And today we've got, I don't know, 60 clients and 20 partners and a bunch of them here, and really excited to be with new friends and old friends like Danielle and Mohsin. No, you're not actually old.
Elena.
My name is Elena Obukhova. I'm founder and CEO at FlashBack.one. It's a platform that helps to issue tickets, loyalty programs, and memberships powered by NFT technology. We're helping small businesses, merchants, and event organizers to build communities and take ownership over these communities through tokenizing them using NFT technology. My journey originally started in 2014 when I was firstly exposed to crypto, as many other people. And since then, I was believing in decentralization. And with Flashback, we are giving this opportunity to event organizers and merchants to create communities and bring NFT technology to masses.
Hello, everyone. I'm Sandeep, Kaur, and I'm with Reach. Reach is a blockchain development platform to build decentralized applications. I'm also an advisor on New York City Real Estate Coin, which is a traditional fund, and we are adopting technology, blockchain, to tokenize it and also create a secondary market for this.
My name's Tommy. I'm with Energi. We are a blockchain highly focused on security. Our flagship product is a major NFT platform competitor OpenSea. We're the only ones in the blockchain space who've built on-chain governance, basically disables crime. And we just closed our first investment. It's $50 million about an hour ago.
See, I did hear that you were super excited right before the panel too, right? So that's what it was. Congratulations on that.
Thank you.
So we're talking about real estate to stock options, tokenized assets, and how tokenization really unlocks the value across the board. Is that true? Is that not true? And my aim is to give each and every one of the panelists over here the equal opportunity to talk about those points. But Daniel, you want to talk a little bit about how you feel about the topic, and why do we need blockchains and centralized ATSs? Whatever happened to DeFi, and are we really unlocking the value if not?
Well, I think that if we want to use blockchain, we truly have to use blockchain. If you take the example of SIX, which we mentioned earlier today, SIX is the digital exchange in Switzerland. They've been developing for the last 4 years on Corda, but actually everything is centralized. So if we really want to achieve what everybody wants, which is liquidity, then we look at an ecosystem and how do we enable that ecosystem to achieve your path towards liquidity. If you look at traditional exchanges, there is liquidity because there is an ecosystem. First, when you are listed, you need to do your quarterly earning reports. Then you have market makers, rating agencies, and obviously you have an infrastructure. And this is that whole ecosystem that enables instant liquidity. In private market, you're not going to have instant liquidity. First, because you have far more assets than in public market. Euronext, which is the dominant player in Europe, they operate on 8 markets. They have 150 years of existence. They only have 2,000 securities. Again, talking about the European market, you have more than 250,000 companies that have more than 100 people that could be interested by having the token listed on those exchanges. But to enable liquidity, then you need to create an ecosystem. So if we look at how ATSs has been built, they are like 6. They are vertical silos. So in order to achieve liquidity, you need to open those silos and enable those tokens to access deeper liquidity pool. I think that Pat O'Meara mentioned that this morning. The objective of Inveniam is to create an ecosystem by investing into different companies that realize this is an ecosystem where everybody has to contribute and participate. And what Tokeny has been doing is creating a standard, the ERC 3643, that can, of course, circulate on private markets through OTC bulletin boards, but also that can be plugged into those regulated market infrastructure that can then share liquidity to achieve this path towards, a more liquid market.
So that's real interesting, but that kind of leads to the point. Really, tokenization? Do we even need to go that route, David? What are your thoughts on that?
You want me to argue for or against tokenization?
My friend, you run a good conversation, so you pick and choose, and I'm sure everyone else will have an opinion on that topic too. So go for it.
Yeah, I believe that tokenization is a means to an end. It's not the end in itself. I mean, one of the cool things about tokenization is the ability to encode or program assets with things like trade and transfer restrictions. It's something you can't do on a spreadsheet, something you can't do on an index card. And so from that perspective, tokenization can do very interesting things for assets. Say, you can only sell so much of your holding. You can only sell it during certain time periods. You can only trade it within a window. Those are the things I think that tokenization of assets work really, really well for. There's a mistaken notion that tokenization somehow replaces the legal process. You can't really put ROFRs effectively on chain right now or other things like that. So I think that tokenization at this point, while we're still working on getting this whole thing kind of hooked up here, should be simple, okay? And also I have to say that I don't think that tokens are especially effective for raising funds, although there are a couple of cases in this room that have raised money on a token itself. I think it's a limiting factor for some, but I think that this is all going to change, and hopefully you're going to ask me the other question, and I can tell you why everything's going to change.
So what should not be tokenized, and what give your holistic view on it? I think you're being too kind and too nice at this point.
I don't, if tokenization, like what Danielle was saying, facilitates liquidity through ATSs and trading platforms, then why tokenize an early stage asset which is not going to be liquid for many years? What is the point of that? I still think that this is not an early stage technology for tokenizing the asset. A lot of early stage companies are the companies that are tokenizing assets, however, but
Absolutely. We see that in real estate as well all the time, right? You start putting on a development project, like very close to an early stage startup, and that's a lot more difficult to get people to get.
It's a lot of expense before the benefit.
Absolutely. And so going after slightly more mature assets within the private market space is definitely something that adds value to it. There's the notion of tokenization adds democratization. What are your thoughts on that, Elena? How do you see that happening? And does that really, did you really see democratization happening within the space, or is it just another buzzword that all of us like to use?
I feel it's more of a buzzword for now. And if I remember 2017 and 2018, we were all discussing how we're going to tokenize everything. We're going to tokenize different assets. We're going to tokenize real estate. All properties will be sold through blockchain, and we will remove all middlemen. Is it happening? No. We're still here. We're still discussing that there are lots of entry barriers. There are still uncertainties on the regulatory side. There are still lots of restrictions in the industry where, for example, if we're talking about startups, can they issue security tokens easily? No. They still have to go through lots of compliance. They have to hire lawyers. They have to have big budgets to go through audit and all these procedures in order to issue their security tokens. And then, can they sell them to everyone? No, right? It's not happening. Of course, if they apply, for example, in the United States for a certain regulation, there will be also limits on investors that they can approach, whether it's accredited investors, and lots of people cannot get accreditation as well. And if we're talking about tokenizing, not through security tokens, we're talking about NFTs. Right now, there are lots of discussions on NFTs being used for real estate, NFTs being used for different businesses, and also like a way to tokenize an asset, and sometimes a way to do a fundraising. With NFTs, right now there is no regulations, no one yet understanding how the whole market gonna work. But if you remember 2017 and 18, same situation with ICOs. People were raising money. They were really happy until SEC decided to go after them and said, guys, it's very nice, you raised lots of money, but it's not a utility token, it's a security token. So now you did something wrong, and you have to either give this money back to your investors, you have to go through additional compliance, and many businesses had to go through certain issues. And with NFTs, it's no different. Right now, we're seeing companies trying to use NFT to sell property or do fundraising until someone will realize that it's security, and until regulation will come in place, and these businesses will have to answer. So if we're talking about democratization, it can only happen if we don't have all these regulations and restrictions, because then our people will be able to get access to assets, to financing, without going, for example, through KYC. And there is still good amount of people who don't have not digital ID, sorry, the national ID. They cannot even go through KYC. Then we have different restrictions and sanctions on certain individuals who weren't even supposed to have it, and they cannot get access to financing. So if we're talking about democratization, we can look at DeFi, we can look at the crypto markets, where people can get access to products. But if we're talking about security tokens, tokenizing assets, there is no democratization. And I don't think it's ever going to happen.
So I'm going to take that to a next step. I know we've been talking about a lot of things that are going wrong with this space, right? But when you're talking about democratizing the space, you've got to understand where you are today and how you're improving it and what that pathway to ultimate democratization is, right? It doesn't go from 0 to 100 from within one step. If you look at real estate, the space that I'm in, less than 5% of commercial real estate is owned by women, owned and managed by women. That aspect needs to be democratized in itself. Your accredited investor threshold is, as a household, about $300,000 of income for 2 years. There's, about 12 million households across the US, which are qualified as accredited investors per 2016 survey. And out of those 12 million, more than 40% are between the age of 30 to 50 who are qualifying based on that income threshold. They don't have access to a lot of these private market assets. Don't you think that qualifies as democratization as you're opening the world up? Like, does it have to be absolute democratization versus is there room for, yes, let's go towards it while working within existing regulations and working with what the infrastructure we have currently to get to that ultimate goal eventually?
I definitely see that it's like we have some improvements. We're improving the ways we're selling real estate, and of course, you will know even more on that aspect. Yeah, we are improving. But at the same time, we have regulators who don't understand what people need. They're pushing some new laws, some new restrictions, and that causing lots of problems to businesses. Even if we're talking about institutions, we don't even need to talk about startups. If you ask bankers, how do they feel about regulations? I'm pretty sure they're never happy because they cannot just freely allocate their capital because they have to be complied with a certain regulation. And yeah, I completely agree that we're moving somewhere. We have to work with what we have right now, but at the same time, I believe we need to start changing. We need to push for a better framework. We need to discuss how we can change a system that can work and facilitate the growth of democratization in the crypto space, in the real estate market, even in the financial market. That is a primary goal, to give a financial freedom to people who have they don't have access to financing. There are so many people in the world that don't have access to basic financing. And that was a primary goal of crypto, to give them financial freedom, to give them, to make them inclusive, financially inclusive. And we're still so far away because we're not discussing how we can change the system, because we're not trying to educate people. I've heard so many complaints how centralized exchanges should help, or they should protect individuals from some hacks. Do they? The main idea of cryptocurrency is that we have a transparency.
Well, not crypto, right? We're talking about tokenizing
and tokenized assets is the same, right? So we're talking about blockchain. We can actually prove, we can actually review the contract. We can now see what is added there. And it's the same for real estate. You don't need to go through lawyers. You don't need to go through all these procedures when you actually have everything transparent. Of course, we still have to place
you're definitely getting ahead of where we are right now. I think that's where I think a lot of folks want to go, right? Sandeep, I think this is probably an area where you're super interested. So
yeah, no.
So we were talking earlier about wealth moving from baby boomers to the millennials. Do you think we're headed in the right direction with tokenized assets, and are they unlocking value in that space? What are your thoughts on there?
So one thing that we really can't ignore, and that is the trend. So baby boomers, they are the richest generation in human history. And $68 trillion worth of value or asset that's going to move from baby boomers to millennial and Gen Z. by 2030. So that is a very big, transfer in the history, wealth transfer in the history. So if we look at that, the way baby boomers invested and the opportunities they had, millennial and Gen Z, our opportunities are very, very different. We do not have that kind of opportunities, and the investing style is very different. Millennials just don't invest the way baby boomers invested. Right now, the average age in RIA is like 59 and plus, right? That's just the reality we are living in. So from that perspective, you just can't ignore the trend. And I think there's a desperate need in the market to have assets or products that really create value. So right now, as a millennial, you inherit a prime portfolio from your parents or grandparents. And right now, because you kind of invest into some speculative asset in crypto, and then you lose it. So very volatile assets, something like that, that's not really a smart thing to do. And that's where I do see the value of tokenization, like asset that's backed by some real value, which is less volatile. From that perspective, we look at it, really creating those kind of products for millennial and for Gen Z, so that they can invest into those products. So I think that is definitely a very big opportunity for all of us. And when I look at that data, by 2030, $68 trillion moving from baby boomers to millennial and Gen Z, I feel like we are running out of time if we are not building good products. So that's my thought on it.
That's good. Sweet. So, Tommy, why don't you talk about Energi and tokenization, and lead with that, and I'll take up the second question with you again as well.
Okay, well, just staying on the topic here of unlocked value, NFTs are the fastest growing sector in the crypto space, and that's occurring because of an innovation that occurred in NFTs, which is a royalty system. That is the reason why Bored Apes Yacht Club went from being worth nothing to being a multi-billion-dollar company in 11 months. I think this is where a tremendous amount of value is going to be unlocked in the next few years. These communities can be monetized like they can't before. If you liked a sports team, you might be able to invest in a stock, but now you can actually invest in a community with that specific team, and so on and so forth. And that's just what's going on right now. In the near future, that's going to expand to music as well, and perhaps a combination of art and music, or physical art and music. But that's what I see as the kind of the cutting edge of what's going on in crypto in terms of assets unlocking value. Obviously, real estate and stuff is going to start getting tokenized. The biggest problem that I see with all this is the aspect of security, which I'm very security-minded, and that's what essentially the problem that we've solved, and especially in the NFT space, it's quite bad. If any of you guys are in NFTs, or you probably know someone who's been scammed, and it's really kind of sad, and the space doesn't talk about it probably as much as it should, but we should rise our level of consciousness as humanity, and I really realize that crypto being the wild, wild west is not the future of tokenized assets. There needs to be kind of governance in place, kind of alluding to the earlier conversation. On-chain governance, that's one of the things that we have. And create a kind of safe environment for assets to exist, where people can invest in, communities that they believe in. And if those communities are growing well, then the investors see that appreciation. So that's kind of where I see it going.
So what do you see as the future of tokenization? And we'll just come back with the same question with all of you. I'd love your point of view on this.
Sorry, what do you mean exactly?
The future in tokenization, where do you see that going? Do you see more non-fungible tokens going towards, whether it's art or music or royalties for any other form, or is it more about security tokens, or what are your thoughts on the growth and adoption on that?
Yeah, good question. I think what's inhibiting a lot of companies these days from getting in the space is a fear of exactly what I said. We're talking to some companies ourselves, and they have a fear of tokenizing their assets. One company we're talking to has a vault of, like 100,000 pieces that they want to tokenize. They have fears about things like security, tarnishing their reputation, and so on and so forth. So I think creating a safe environment is critical for companies to tokenize, but yeah, just there's a whole lot of assets out there right now that could be tokenized, collectibles, sports memorabilia, guitars, etc., that aren't being capitalized. I think things like real estate and stuff are, kind of the obvious ones, and those can be fungible or they can be non-fungible depending on how they're presented. But I personally am kind of focused on those aspects that aren't so obvious but are growing quite a lot. Again, like that's the communities, monetizing communities. It's never existed before like it's happening now. It's pretty cool. Does that answer the question? I don't know.
Hey, so while we're talking about getting into the future of tokenization, Dave, one asset class that we should never ever tokenize, and why not? Like, why stay away from it?
Well, I'll repeat that early stage venture capital is among the worst assets to tokenize.
Wouldn't you want liquidity for your employees and for yourself and your partners in your company?
What company that's worth 10 or 20 million has enough float and has built a big enough company that you'd want to trade it? I mean, the reason why you invest in a company at a 5, 10, $20 million valuation is because you want to sit on it, you want to buy it at a low price and have it appreciate. The last thing you want to do is have that company getting actively traded and setting a price, because what venture capitalists do is they use faith-based or future-based pricing to value your company at more in each subsequent round. If you start having shares floated when the company's worth 10 million, then you start an unnatural price discovery phase, which is much too premature for companies. And you really shouldn't be letting your investors or your employees sell at that point. I mean, you're going to see a lot of weird. I think that will create perversions. So,
fair enough. Sandeep, what do you think's the future? Where do you see it going?
Let's talk about where we are and where we've been. So 2018 was the version 1 of the so-called security token era. It was kind of like it was like ICOs, but with new restrictions, and that mostly failed because everyone had to know how to use MetaMask. There were no markets. There was a lot of counterparty risk, settlement risk, and again, it was a whole bunch of dodgy early stage startups. So that pretty much flopped. We're in version 2 right now. Version 2 is a more API era where a bunch of companies, they're all here. I mean, they're all surrounded by them, who are building together, which is very unusual in technology for companies to be like collaborative, but kind of forming multi-cell networks and organisms, and it's very API driven as a response to regulation and usability. In the next year or two, we're going to see a really interesting development where wallets will come back to the fore, where you'll see not just the purchase and sale of digital asset securities, but you'll see the collateralization of tokenized securities, because you don't always want to sell. And so I believe that in 2 years or so, security tokens are going to actually consume and take over DeFi, because bringing real world assets that are secured by a tokenized security, are far better collateral than highly volatile cryptos. So, and this is just going to take a little while, but then it's going to really unite these kind of 3 factions that exist today, which is security tokens, which is like that horse that won the Derby this weekend, okay? 80 to 1. DeFi, which is under assault by the regulators, and NFTs, which are nominally securities, but some people just say they're JPEGs. Security tokens are going to consume and subsume all of that, and you all are going to be seen as liberators and heroes. So know that you are actually the coolest kids. You're just a little slower than the other ones.
So what do you think is the future? You're working on on an interesting project when it comes to the New York City real estate coin. Where do you see that going in the future? What do you see with the space?
Okay, so what just Dave said, I think I echo that, like everything will be tokenized, but I think on a practical level, just because we say everything can be tokenized, it doesn't mean that we need to tokenize everything because it is a cool thing to do, right? It's just like using blockchain for everything just because blockchain is a buzzword. Does not make sense. So really need to see like where this technology really kind of fits in, like what are the good use cases, right? So one of the good use case means even though like this is a prime real estate in New York City, tokenizing this building, right? So that's like New York City real estate coin. It is a fund, very traditional fund, which is adopting blockchain technology and creating a secondary market. So investors, they can buy a token which is backed by a real asset. So one thing that means, right now, the volatility we are seeing in a crypto market, just because many of those tokens are just, based on speculation. But if you invest into a token that is backed by some real value, that will definitely, mean the volatility on that would be less. So it is backed by some proper collateral is there, right? So I think like projects like this, like tokenizing real estate is the obvious one, of course, that really has a very big, great potential. And also means if it is a fund, then the investors, they will also get dividend on it. I mean, and they also can kind of get interest on it. So giving those opportunities to the younger generation. One is, it's a traditional market, like traditional fund, the way baby boomers did it, the same thing, but at the same time, adopting technology and giving access to the younger generation that will be appealing to them, and they like to use that. So I think that's definitely something is, interesting to do, yeah.
That's great. I think you brought up some really fun points. The way that I like to present it is blockchain is not a solution in search of a problem, as long as it's applied appropriately, right? Mm-hmm. It's actually truly solving some really, really difficult problems out there, and definitely out there for the future. And not everything should be tokenized, only where it makes sense. Practically or technically, you could tokenize this chair or that mug or anything at all, but does it make sense to do so? Daniel, you're working a lot. You guys came up with the T-Rex protocol. You guys have been leaders in this space. Where do you see the space going? What are your thoughts?
Well, it's funny because it always comes down to what is the next use case, what is the most sexy asset. So we have to come with something that is sexy, otherwise no one is interested. But there is something that is really not sexy. This is the plumbing. It's this old back office thing. Everybody was talking about those neobanks a couple of years ago. Neobanks have not changed anything. They're just another UX, right? The plumbing behind is still the same. And the plumbing has been the same for many years, and nothing has changed, actually. If you look at any bank, how they've been growing over the years, or a company like Apex, they've been growing by acquisition. Think about the numbers of information systems they have internally. How many keying of information they have to do, with all the potential mistakes that is driven by doing that. So this is the first time in history that now we can stop an activity, or not even stop an activity, continue an activity, and migrate to a new infrastructure, because this is an infrastructure play. All assets will be tokenized because this is simply more cost effective than to manage that on centralized infrastructure. And don't tell me it's not possible, because 5 years ago, everybody was talking about the cloud and saying, no, we're never going to migrate to the cloud. And now everybody's on the cloud, right? So, and this is a massive transformation that will happen to the industry. Then, once you have those assets that are tokenized, and I would love that we stop referring to tokenization, because this is just dematerializing an asset on another infrastructure. It is not a new asset class. It is just dematerialized on decentralized infrastructure other than on an Excel sheet. But once you have that, then you have an asset that is actionable. And then comes the sexy thing. So let's talk about the sexy use case, for example. You know, I live in Europe, so we are being taken care from a pension perspective, but here you have to invest in pension funds, right? So every month you invest the amount of money that you can afford you know, to put in your pension plan because you have to pay your daily livings, right? If you could invest everything at the beginning of the month and benefit from the yields of that pension fund, which is pretty good, pretty high, right? And you just borrow what you need for living at a very low rate. Low rate because what you have as a collateral is a token. And the token is properly priced by Inveniam. And because there is secondary market, there's liquidity for the lender that will be able to put that in the market, applying a specific haircut. And then you obviously are enabled to invest everything in your pension fund, have a high yield, and just consume what you need at a low rate. And then you basically create value by tokenization. So tokenization in itself is not a new asset class. It's just a new type of representation that is actionable and that enables to create new services around your asset and create more yields on your asset. This is what it is. So if you know that, what is the future of tokenization? Well, here. Because everything will be dematerialized on blockchain. This is simply more cost effective. That's it. And the one that will not have actionable data, well, simply they will be less competitive and they will be out of business.
So, actionable data, absolutely key. A vast liquidity network, not locked in. So, we're talking about Inveniam, we're talking about Onera, we're talking about a lot of the people who've talked earlier today and this entire room. We've got such a captive audience. I would really like if each of you could point out one thing that you'd want everyone over here to do. I know we've got our last 5 minutes. What would you want everyone in this room to do? Just pick one thing and take the lead with that. We can, Daniel, if you want to start, and then we can just go that way.
Jesus, I needed time to think about it. Well, I think that the fact that we are already there, sitting here, demonstrate that we are believers. I think that we need to continue decorrelating crypto from the infrastructure play. Crypto is not blockchain, right? So we need to realize that there are different worlds around this technology, and we need to continue being heroes in our own organization to explain what it is about, to educate. Uneducation is probably what we have to fight the most, because then we start to have fake news or stupid articles on the downside of crypto, while what we do is changing the plumbing.
That's great. Definitely that distinction between crypto and blockchain and that educational side is extremely, extremely important. Even given the conversations we've had today, it's key to have that differentiation. Dave, one thing about Vertalo that you want everyone to do.
Wow, look at that, more stumpers. Infrastructure is not boring. Infrastructure is super sexy. So,
in certain movie, being a plumber is sexy, but.
Yeah, so I'm going to answer a question you didn't ask. If you're a VC here and you've got a fund that's past its 10-year fund life, just do your LPs a favor and then tokenize that fund and then let them get out. Okay? If you're CEO of a mid to late stage venture funded company over 500 million, you're not going to IPO probably, and you're probably not going to get acquired. Why don't you let your poor indentured servant employees sell their shares, tokenize them, programmatically tender them, just release these poor children that you've enslaved for 10 years of promises. This is an amazing technology for that sort of thing.
Elena.
Locked in private investments that are all going to unicorn and go public. Guess what? They're not. Time to make them liquid. Okay, that music just stopped. Okay, it stopped last week.
Elena, what are your thoughts on that?
First of all, I believe that tokenization gives opportunities like that we never saw before. So for example, I mentioned communities. And communities becoming a very important part of every business. And right now, if we're talking about startups, they're trying to, I don't know, in the crypto space, it's Discord, right? They're trying to build their communities there. If we're talking about traditional businesses, it's their client base. Every single business has a community, whether those are clients, their employees, other supporters, partners, and these communities now can be tokenized through, for example, NFT technology. And if before you were building your community on a centralized platform, if something happens to this centralized platform, you're eventually losing access to your community. And when we're talking about asset is something that has financial value. And these communities are having financial value. And now with NFT technology, businesses can have these communities outside of any centralized platform. They can rely on their business to operate, even if something happens to other company. And with the flashback, it's the same. So people can issue NFTs, get access to their community. Their community are NFT holders. And eventually, this is an asset that they can also sell. These communities can be sold through a blockchain.
Sweet. Sandeep, one ask, what would you have?
Okay, we only have 12 seconds. So I think real estate, stocks, and definitely funds, what Dave just said. Yeah, I'm just going to go with that. And yeah, build all these products using Reach.
All right. Well,
You had all the time to think about this, man. You had like 4 people go before you. I'd expect.
How much time do we have left?
Quick. We're over time. No,
okay, just kidding. Well, yeah, just to kind of continue from what I was talking about, honestly, the first time I heard of NFTs, I was very skeptical. But if you think about it, you realize a lot of the cryptocurrencies, tokens, coins out there are pursuing a technical endeavor that is kind of becoming unnecessary. There's a kind of, the technology is kind of being built around Ethereum for the most part these days. So you don't need to compete on the technological level, but where the game is shifting is it's shifting to communities. I do see that as a major, I guess, future of cryptocurrency. Again, I encourage you guys all to understand how they work, understand that royalty system. It's really powerful. Like, in my opinion, Dogecoin and Shiba Inu and these sorts of coins should have been NFTs, and they would have had a lot more power if they did. And this system really empowers these communities to grow like never before. So what we're seeing today with Bored Apes and stuff, there's probably going to be new communities none of us have ever heard of that are going to explode in the next few years. So I will also make a caveat that 99% of NFTs are absolute garbage, so be very, very careful. So keep that in mind too. Yeah, do start learning about it if you haven't yet, and be really careful in the NFT space because it is extremely crime-ridden. So, there's a lot of fake collections that pretend like they're the real collection and so on and so forth. Again, crime is just a growing issue in the crypto space, so just be really careful. I've known a lot of people who've lost their life savings and that sort of stuff, so just take a lot of caution. And if you want a safe environment, come talk to us. We're Energi. We provide that, so that's what I got.
So we've got a great panel here. We really appreciate everyone's feedback. I was shocked. I was hoping for some kind of sales pitch from at least one of you about your product. So Dave talked about putting private markets, mature funds on the blockchain or tokenizing them. So let's get Tokeny to tokenize one of those funds. Let's get Dave to be the transfer agent and the infrastructure behind some of that. Let's get Onera to get it distributed across all the ATSs sitting in this room, and let's get Invenium to credentialize the data. And if any of you are asset owners, come to me and I'll tokenize your real estate assets for you. But thank you so much, everyone. Really appreciate all of your thoughts. And thank you for being so patient with us.
Thank you.
Thank you.